For more on this, we're joined by Naeem Aslam in London. He's Chief Investment Officer at Zaye Capital Markets. Hi there, Naeem. Now, with major indices across Europe down over 1%, how much more downside should investors expect if the Wednesday ceasefire deadline passes without a deal?
Sure, thanks for having me. Look, I think as we have to go by every single tweet, that is the world that we are living in, because every tweet changes the narrative, stance, and the trading strategies behind that one. Because as you've alluded right on top of your show, there was a massive optimism on Friday, because now there's a permanent ceasefire deal will be on the table, and then we saw a massive rally and then crash in oil prices, everything reversed. So as of today, what we are looking at in terms of our trading desk is the president is about to speak at 3 p.m. So the Eastern time that when he's going to sign those particular new executive deals, he's also about to make some serious statement about Iran. Now, the rumors are that perhaps the ceasefire which is in place may no longer remain in place. And if that happens, we will see a massive crash in sentiment among investors and traders. And that means huge amount of sell-off in terms of the equity markets. It's basically the same playbook. Buy oil, buy insurance companies, sell equities, buy hedge. That is the trade.
Now, with energy-led inflation revised up to 2.6% for the year, does the latest escalation effectively force the ECB to abandon plans for interest rate cuts later in the year?
I think ECB is not the only central bank which has been forced by the recent events. I think there are a number of other banks throughout the world which would be very much forced to either keep the interest rates at the current level for an extended period of time, or perhaps even think of increasing them. Now, the important aspect is that if we look at what happened on Friday, oil prices crashed. Everything was just like very much okay. Now we're going to see the normal flow. The WTI prices as of Friday, we were looking at just challenging the early handles of $80, and then perhaps there was an optimism that if this deal holds, and if it still holds, we will break below the $80 level. Now, why that is important for inflation is very important, because if we start to trade in the mids of 75s, then we are not too far from the pre-war levels, which is 67 to 75. Then everything changes with that respect, because now you're looking at a situation where perhaps a rate cut will come back on the table much more faster than many investors will think. And I think that is where smart money is looking at. So smart money, in very brief, is looking at what is the next tweet, what is the long-term narrative, if peace is going to hold, or if the situation is going to escalate.
Now, you mentioned Trump's tweets. He's now threatened to target Iran's power plants and bridges. If we move to a broader campaign now, what happens to Europe's energy security?
I think Europe is already very much standing on the cliff edge. The only security they had, if you look at something a bit more closer to that one, was Qatar, because that was your major provider of natural gas. Now, Europe has a number of different options. Number one, go back to America and then pay much more higher prices, pass those higher prices to consumers like us to cushion the bill. When you go to the shops, inflation is already up. Regardless of what you are buying, you can see that one, and then those numbers are still lacking in the actual number. Number two, either correct their relationships with Russia to acquire a cheaper gas from them, or just revert back to what they have, because this LNG crisis, regardless of the Strait of Hormuz, what happens, is still going to be very much in play. And from the government's perspective, it is all about diversifications. And in terms of an investment perspective, it is the US producers which are about to gain more. And from consumers' perspective, they're going to bleed more blood.
Naeem Aslam in London, great to have your thoughts. Thank you.